Yes, at Metropole TVKE across all your social media platforms. I am at Kiage Simba online. We do have a lot of contribution going online. You need to be part and parcel of that as well. Remember, we said some of the conversations we're going to talk about this morning is now the impending listing of all loan SACCO defaulters. Let me just go through a couple of the responses that we're getting. We have the response from David RK, who's saying, look, clause 5 is key to protect clients' savings, and clause 6 is also okay for me. We're going to look at those clauses this morning. And then he continues saying, every intention hopefully comes from a point of information as well. A lot of contribution coming through. You also have to be part and a parcel of that as well at Metropole TVKE across all your social media platforms. Join us online. We are on with that conversation. Now, all right, let's move on then and talk about that before I introduce the gentlemen who are joining us this morning for the better part of this morning, so we can talk about those major economic headlines. Now, savings and credit cooperative societies, SACCOs, will soon be compelled to share information with the Credit Reference Bureau's CRBs after Parliament backed the SACCO Societies Amendment Bill that went through its second reading Wednesday evening last week. That was among the 23 bills that the High Court in a 2020 declared unconstitutional for having been passed by the National Assembly without the input of the Senate. Now, the bill that seeks to overhaul how SACCOs operate will see to the alignment of the SACCO Societies Act 2008 with the Banking Act and the Microfinance Act 2008, bringing the credit information sharing under a single regulatory framework, a move likely to net hundreds of thousands of SACCO defaulters. Currently, SACCOs only share positive credit information among themselves, but only share data with CRBs under the third practice category, with the current bill requiring the SACCOs share both positive and negative information of their customers with licensed CRBs. Now, the bill further proposes that deposit-taking SACCOs will now have 12 months to comply with the new law. Now, the new deposit-taking SACCOs will have 12 months to comply with that particular law as well. Just before we talk about this particular issue this morning, let's jump into that SACCO data that we have this morning from the Metropole Harvest. We're going to start from this particular area this morning. Rich, if you could have jumped into that data set this morning. Yes, we're looking at the key financial parameters of deposit-taking SACCOs in the country. You will see the total assets as of 2021 stood at 627 billion, 0.68 to be exact. And if you look at the gross loans vis-a-vis those total assets, we're talking about 474.77%, quite a high ratio there. Net loans and advances stood at 450.58 billion. Total deposits vis-a-vis net loans and advances, you will see they are at 431.46 as well. Capital reserve, you're talking about 115.28, and if you look at the core capital, they're talking about 97.74 billion, and allowances for loan losses, we're talking about 24.19 billion as well. Let's jump onto non-performing loans of deposit-taking SACCOs, and you can say that indeed this is the area then that would require that particular amendment to come into force. From 2018 to 2020, we're talking about 23.97 billion as of 2018. That has jumped to 39.86 billion as the end of 2020. Let's move on to the next data set this morning that would also encompass 2020, and 2020 is a good conversation point this morning because then we're looking at the height of the coronavirus pandemic. Then if you look at this data set this morning, if you look at market share of deposit-taking SACCOs by total assets as the end of the financial year 2020, then you will see that those ones that have total assets above 5 billion are the ones that are taking the bigger chunk at 62%, but 30% are those with total assets between 1 billion and 5 billion, and those ones with total assets below 1 billion only capture 8% of that entire percentage of SACCOs in the country. All right, now we do know exactly where we are. Let me therefore introduce the panel that is joining us this morning. We have Chacha Bichanga, who's a financial literacy coach and analyst as well. Chacha, good morning, sir. How are you doing?
Good morning, Simba. How do you do?
We are fantastic. Thank you very much for joining us this morning. We do also have Justin Mwangi, who's an investment analyst, Cyton. Justin, good morning, sir.
Good morning, Simba. Thank you very much for having me this morning.
Anytime, sir. We also do expect to be joined by Rufus Kamau, who's a research and a market analyst at Scope Markets. Good. Let me jump into that first question for you, Justin. I'd like to open with you this morning. I mean, this alignment of the SACCOs Amendment Act of 2008 to the Banking Act, do you think it's important in this particular industry under the financial services sector, Justin?
Yes, by all means, this amendment bill is very important in many different ways. You've highlighted just one aspect, which is the listing on CRB of SACCO loan defaulters. There are other elements that also come out from the bill, which are very important, such as focus on using ICT in collection and receiving information. That is in SASRA. We also have focus on ensuring that SASRA is empowered enough to be able to punish those SACCOs that may here or there make mistakes or take activities that go against their members by increasing, for example, the fines they'll be able to levy against such SACCOs. So all in all, I think it's in line with what the ministry is trying to do, whereby because SACCO is a really big part of the financial services sector in our country, then try to ensure that everything is as tight as possible. People giving their money to SACCOs and those taking loans from SACCOs, everything is up in a very prudent manner. And also those people taking loans, they also at the end of the day know that they're taking loans. They help themselves and they have to repay these loans because this money belong to other SACCO members and their guarantors who are in place and all these other parties who may be affected if they choose not to repay their loans. So it's the SACCO industry in itself is very good, helps many people to develop, and any bill or any act by the parliament in a bid to make it more airtight and also more financially transparent is always a good measure in my view.
Fantastic. Justin, I'll be coming back to you on that because there are then other talking points around that area, especially when you look at exactly the composition of deposit-taking SACCOs in the country. Let me cross over to you, Chacha. How important is this legislation, especially when you look at the SACCO culture in the country?
Yeah, thank you, Simba. The SACCOs Amendment Bill 2021 is important in various ways, just as my brother Justin has said. But I want to say this bill is actually a double-edged sword.
Yes.
For one, the bill spells bad news to SACCO members who have a bad history, a bad credit history. You know, SACCOs for a long time have been loaning huge sums of money to SACCO members, and quite a number of those members who take loans default. And the SACCOs have been penalizing the guarantors because the guarantors now act as a security for the loans taken, despite the deposits, which also acts as a collateral. So you'll find that in case of SACCO loan defaults, the guarantors are the ones who suffer because they are attached and maybe their salary is deducted via checkoff. And at times, maybe they go they dig into their saving deposits. So in this case, members will suffer in one or another, but it will entrench a culture of discipline, a culture of integrity, a culture of transparency, and accountability in the management of SACCO matters. So this bill it spells good news to the circles in as far as the way they operate, because as we have said, it will entrench the culture of accountability and transparency. Because here, circles will be required to prepare their books of accounts and they give both positive and negative information. They will have to show the list of the liabilities, the list of the loans, the borrowers, the bad debts. You know, initially, circles who are not sharing this information openly. They were required first to seek the client's consent before sharing the information.
Yes.
They were also required to seek the consent of the Central Bank of Kenya. But with this amendment bill, now it will become easier for circles to share information to the credit reference bureaus without following those bureaucratic mechanisms of CBK's approval and the consent of the members. So it is good as far as, because many circles have been mismanaged and many are actually falling down, Simba.
Pretty much. Justin, then let's speak about that particular area then. And I want us to look at that data for non-performing loans and deposit taking circles in the country, which if we could just jump to that. So we talk about it this morning. I mean, you can see that if you go back to 2018 all the way to 2020, then you will see that non-performing loans have been on an increasing trend, which if you could just show us that data this morning, not just deposit taking circle non-performing loans, this is the under the banking sector. And then you will see that they have actually been increasing. And then if you look at the market share again, Justin, for where we have a lot of these deposit taking loans, then you will see that indeed majority of the circles that have been attracting non-performing loans have been the smaller circles, you will say, within the economy. Could you say that what has been attracting business to these circles, I'm talking about the smaller circles, is the fact that indeed they have not been blacklisting their customers? Then you like to think now that they're going to be blacklisted, that indeed people will be looking at these circles and saying probably not a very good area to go for credit, Justin. Would you say that?
Yeah, no, not directly,
Yes.
Simba.
Yes.
So when you look at CRB listing, the Credit Reference Bureau listing on its own, it really has two effects. Number one, it allows people who offer loans to have more information, to be able to better price their loans, generally speaking, and also for them to filter out people who have had historically bad loan repayment.
Yes.
Bad loan repayment, to at least either increase the interest rate offered to them or deny them a loan in the short term. So that is on the good side in terms of increasing the soundness of the financial services sector. The other way, of course, is if someone had a bad history of repaying their loans, now in the future, of course, they're going to be denied credit, really for a period of about 5 years maximum. So that will limit extension of credit to the private sector in a way. However, that is a price to pay if at the end of the day we are going to inculcate that culture of discipline whereby people who take loans actually know there's nowhere for them to escape. Because as you're saying, it is true, small circles, and you'll hear some of them as they're selling to you, saying that regardless of whether you're listed on CRB or not, you can take a loan from us. Don't worry, come to us, we give you a loan, and then you'll be able to repay it as your business continues or
Yes.
as your personal situation improves. While that in itself is not terrible, the thing is, once these people who already have a bad history of repaying loans take this culture to also the circles, what we'll see is the statistics you're sharing now, increase of the non-performing loan ratio from 6% 2018 to 9% 2020,
Yes.
and it's likely to keep going higher. So it is a very necessary measure. The small circles may suffer initially because we have people who run to circles because they know circles don't necessarily focus on CRB, or they don't put it really high in terms of their priority when analyzing who to give money to, because mostly there is a guarantor. But it will make people feel more. They will have to repay their loans because they know if they don't, they will suffer in the future if they need to borrow a loan in the future, not just from the circle industry, but also from banks and other financial services
Yes.
institutions. They will suffer.
Yes.
Then lastly, guarantors are going to benefit a huge deal from this type of movement if actually assented by the president, because as Mr. Chacha said, guarantors end up taking the brunt of people who don't repay their loans, because it is their own hard-earned money which they use to guarantee these SACCO members who have taken loans on good faith that is taken away when people don't pay their loans. So if people increase their discipline, people repay their loans more in a more effective manner, then everyone benefits. The SACCO benefits, the banking institution, other financial services sectors benefit, the guarantor benefits.
Pretty much. Justin, just before I let you go as well, I just want us to look at that data under the key financial indicators for deposit taking SACCOs in the country. Rich, if you could just jump into that as well. Now, what is interesting, and I would like to ask you a question from that on whether indeed this is why these SACCOs really needed this particular law to change. If you look at the total assets, Justin, as of 2021, we're talking about 627.68 billion. But if you look at that vis-a-vis gross loans, we're talking about 474.77 billion. But then if you look at the total deposits as well, we're talking about 431.46. So really, when you're talking about the margins in terms of what these SACCOs are holding vis-a-vis what they're lending, Justine, it's just a small margin. I mean, those ratios are quite close. I mean, total assets, 627, gross loans, 474. And if you look at the core capital, just 97.74. But then if you look at allowance for loans losses, 27.91. Bigger margins really when talking about assets ratio vis-a-vis the loans that they're actually giving out. Is that why then this was very important for this SACCOs, Justin?
Well, those figures, to answer it, when you mention those figures, I see anything wrong with the ratio to total assets. This is because their full name is Savings and Credit Cooperative Society.
Yes.
Go to this. Yes, of course, they are saving. They are going to get a certain return, but many of them also need money to either develop business, etc. They'll look from this up. So loaning out money is a very key function of SACCOs. So it in the banking sector, loan to depreciation 20 to 80% in most big banks. Same because, and for SACCOs even because they know that it is. Sorry, for a second. But let me just speak from where I was. I was saying that when you look at nowadays, SACCOs know that not nowadays, but generally SACCOs know that for every shilling they'll lend out, this is also guaranteed.
Yes.
Either in savings or in assets, either be a car, piece of land somewhere. So they can even afford to lend out more or closer to the level of deposits that they have.
Yes.
The only issue I see from those figures is maybe the provisioning level, and we have seen this even in other, for example, in banks, whereby the NPL coverage ratio, the non-performing loans coverage ratio is very important. You need to provide adequately for the kind of loans that you expect not to perform.
Yes.
In this case, you're talking about 27 billion in provision, while the non-performing loans were about 39 billion or more. So that is maybe the only issue. Maybe they're not factoring in clearly, maybe the effects of COVID, maybe the extent to which they expect people to default.
Yes.
But in other words, and in a conclusion, really nothing wrong with them lending out a lot of the money they have, because you look at the purpose of those loans, they're helping the members.
Pretty much. All right, Chacha, now if you look at this then, we're going to have the SACCO Amendment Act just aligning with the Microfinance Act and the Banking Act as well. So any other person in this space really has the potential to be blacklisted. Would you say that in a sound credit environment, that CRB's of I would say they come in handy just to make the credit environment handy. Would you say that, Chacha?
Yes, I would say that the coming in of the CRB
Yes.
is going to improve the operational environment of the SACCOs.
Yes.
Said the bill seeks to align the SACCOs Act with the Banking and Microfinance Act. Because we are saying, why were the CRBs formed? They were formed and they came into operation around 2010 because of the huge number of non-performing loans, because people were taking loans from banks, from financial institutions, from SACCOs, and they were just getting away with it. And therefore, financial institutions were registering a very big debt burden.
Yes.
So the CRBs here, by just listing, when you are listed in the CRB, it means your record, your track record, your credit history is questionable. And in fact, even when you want to go for a clearance certificate, you must have a clean sheet, meaning that you don't have any default from any bank, be it the SACCOs, from digital lenders. So meaning that now the credit environment has become open, transparent, and that one will bring a culture of discipline among Kenyans.
Yes.
In terms of financial management. We are talking of here personal financial management, because SACCOs here, basically, as my colleague has said, their core business is actually deposit, is actually through the savings and lending the deposits. And that's why you find SACCOs cannot have huge deposits in their capital base that are lying idle. They have to do business with these deposits by lending them out. And in this case, we must have reduced the number of non-performing loans. So by sharing with CRB now, it means people will become more financially prudent, they will become more responsive, they will become more transparent and accountable. And in this case, this will save SACCOs from collapsing. One key area of this SACCO, the SACCO Societies Act, or which is also part of the bill, is that it seeks to establish a deposit guarantee fund. How is this deposit guarantee fund important? This deposit guarantee fund will protect members' savings or deposits in case a SACCO collapses. In the recent past, many SACCOs have been collapsing, particularly the deposit-taking SACCOs, and you find members' deposits are actually at risk. They are not cushioned. But with the creation of the deposit guarantee fund, this is also necessary,
yes.
in line also with the bill that also seeks to align the SACCO Act with the Banking Act, Microfinance Act. This is very good for the economy, because even if we are recovering from the adverse effect of COVID-19, still the future looks hopeful. We are quite optimistic that even SACCOs will register a steady growth instead of registering huge losses. Thank you.
Pretty much. Justin, in just 45 seconds, if you may, I just want to ask you the same question. I want you to score the importance of CRBs in a sound credit environment, Justin. Oh, Justin, could you unmute your mic?
I'm very sorry.
All right.
Yeah, I was saying CRB listing is very important in a way that it offers financial institutions more information about this lender, so that they can know if this is someone who will repay this loan faithfully, or someone who expects to just take this loan and disappear. So it's one of those things that seems like excessive sharing of information, but it's very vital, because that is how you ensure a sound financial services sector. And my belief is that this being introduced to the SACCO industry is going to be very important, and the benefits will spill over, not just in the SACCO industry. The benefits spill over also to the banking industry, microfinance institutions, etc. Because the same people borrow from banks as the same people borrow from SACCOs. So in a nutshell, I think it's a good move.
Pretty much. All right, gentlemen, let's move on to the next issue that we have for you this morning. Well, the country has saved 72.33 billion shillings in foreign debt servicing after parastatals resumed servicing loans earlier than projected. After a majority of them were affected by the COVID-19 pandemic, Treasury now says that the Public Debt Management Office has revealed that foreign debt expenditure has been cut by 18.06% to 328.13 billion on the back of a couple of parastatals resuming debt servicing after earlier projecting that majority of the parastatals would default on their loan repayments. Now, the Treasury had projected that some parastatals would default on loans tapped from foreign lenders, forcing the state to step in, and given that it guaranteed the debt. A revised budget estimates tabled in the National Assembly shows expenditure on principal sums of debt due to top bilateral lenders now this financial year has been slashed by 60.03 billion, while interest payout is down to 12.31 billion shillings, with the data further showing that China's Exim Bank, Japan, Italy, Germany and France accounted for half of the reduction in debt obligations for the fiscal year ending June 2022. Now, this comes even after the Treasury revealed that, and I quote, a majority of the SOEs are facing financial constraints and have applied for consideration to their loans to be written off, end quote. Now, Treasury officials wrote in the annual debt report for the period through June 2021. Now, the Treasury further disclosed that 41 of the 56 parastatals that had government-on-lent credit had failed to service it during the year ended June 2021. Just before we get into that conversation, let's look at where we are in terms of our public debt. And all the way up to June, we do know that we had crossed that 7 trillion mark. Richie, if you could give us that data this morning so we could have a look at where we are in terms of our debt. And we could start from here in terms of Kenya's domestic debt as of 2021. But if you cross onto the next data set, again, you will see indeed that as of 2021 end, we were officially beyond that 7 trillion mark for our debt in terms of public debt. Let's cross over to the next indicator this morning. Now, if you go back to 2020, especially in terms of how we did take that debt, you will see that even on account of our over-reliance to IMF, you will see exactly how the government went deep into borrowing from IMF to bolster our budget. Some of these monies are the ones that were then used as on-lent loans to parastatals just to meet some of the government's budgetary requirements. But Chacha, question comes in like this. How significant is this figure, especially when we look at that other figure as well, that 41 out of the 56 parastatals that the government had given credit are the ones that had failed to actually pay off their loans as of the end of 2021. And the fact that the government has also been writing off parastatal debt. In fact, we should begin from there. Should the government be writing off some of this parastatal debt, Chacha? And how significant is this reduction to the tune of just 72 billion?
Yeah, the act of the government here trying to bail these parastatals, which are in financial problems, is good from one particular angle, but also bad for the economy, because we are saying here, although the government here has saved, let's say, around 100 billion shillings in terms of debt repayment, because some of these parastatals have started servicing the loans that they were awarded. But when you look at the culture, the management practices in the Kenyan parastatals, they are quite questionable because they wreak a lot of, they are characterized by corruption, mismanagement, misappropriation. They are characterized by bad politics, talk about politics of, let's say, ethnicity, tribalism, and so on. Meaning that actually the reason why 41 out of 56 of the Kenyan parastatals are unable to repay the loans that are advanced to them is because of mismanagement. And as a government, this is something that needs to be addressed before granting or giving bailout to the parastatals. For example, we have seen the case of Mumias Sugar, which is under receivership. We have seen the case of Uchumi, which is also under receivership. We have seen the case of Kenya Airways. These parastatals, some of them have received bailouts. Talk of Mumias, talk of the Kenya Airways. But unfortunately, these parastatals are not performing well.
Yes.
Why? Because of endemic corruption. It's because of bad management practices. So first of all, there needs to be a thorough cleanup of the rotten system. Then we can talk of now bailing out, giving these parastatals some money to bail them out. And for your information, I want to tell you that even public universities in Kenya are in the red. Many of them are insolvent, are extremely broke. Talk of the case of Egerton. Students have been out for over 3 months. They also need bailout. And in fact, they have been requesting, like Nairobi University, Kenyatta University, Moi University, JKUAT. These are cases of huge institutions in the government or parastatals which are facing financial challenges because of endemic corruption that has been deeply entrenched over time. So we need a total cleanup of the system, because you cannot actually give money or just put water in a leaking tank, a tank that has holes that need to be sealed. Let us seal the holes first, seal the loopholes, then try to bail out. Otherwise, we'll have many of these parastatals now starting to service the loans advanced to them.
Pretty much. Justin, let's look at that information as well. I mean, they said the country has saved 72.33 billion in foreign debt servicing after parastatals resumed servicing loans earlier than projected, after majority of them were affected by the COVID-19 pandemic. Now, the Public Debt Management Office is also saying that foreign debt expenditure has been cut by 18.06% or to 328.13 billion on the back of a couple of parastatals resuming debt servicing after earlier projecting the majority of the parastatals would default on their repayments. Justin, let's look at that particular area as well. So if indeed they are saying that we've cut that foreign debt repayment by 18.06%, Justin, how significant is this particular figure, 72 billion, especially when you look at the interest on debt repayment that we even have to pay to China itself?
It's significant for sure, Simba, because remember, if the projection by the Treasury was all of them will default in terms of their loan, their debt servicing.
Yes.
And right now we are saying that there's an improvement from zero assumption to 72 billion. Then for sure it is significant. We also have the fact that 72 billion is actually a huge figure. The total foreign debt is about 4 trillion. So if we just do the quick math, gets about 1% or about 2% of the total foreign debt in a year. And this is in terms of debt service. So of course that is commendable. This is something that is expected. And now that it has happened against the poor performance of parastatals, we should commend it, and hopefully we should be able to see this continue.
Yes.
And just to add, any reduction in foreign debt is generally good for the country, because foreign debts, especially those that are denominated in other currencies such as the US dollar or the euro, often end up being quite expensive for us, especially because of how our currency is performing, and also because of some of the rates that we get, that is the commercial rate. So they end up being very expensive. So any reduction is good. And we saw this even in the Treasury expenditure estimates as of December. So far they have borrowed less foreign debt than they expected to borrow.
Yes.
So that is very good for the economy. What is worrying from all that statement, despite of how good it sounds, is the fact that the Treasury itself expected parastatals to default. The fact that 41 out of 56 as you mentioned, have sought some kind of bailout, either partial or full. So that is the worrying bit, and I think we talked about this last time I was with you, whereby the question was, is privatization the answer? There is an argument for it, and possibly aggressive privatization. But as Mr. Chacha has said, we need to see what kind of issues are there before we even consider bailout or privatization. And once we see that there's possibly no way a bailout is a long-term solution,
yes,
then we can even look towards the private sector market.
Yes,
that may be the solution long-term.
Yes. Justin, just before we take a short break, just take a minute or so, if you may. I mean, we do have, like you had Chacha mentioning, we have a lot of government parastatals that are actually asking for bailout. You have to start all the way from Nairobi University, come all the way to Kenya Power, go to KQ, and we do know that some of them have actually been put in line for bailout in the 2022-2023 financial year budget statement. Justin, this issue of the government taking on this on-lent defaults from these parastatals, do you think that it has to be like that? And before we bail out an institution to the tunes of billions, should we first look at alternatives before saying we're going to rush into bailing them out?
I think it's very worrying if you see an institution being bailed out more than once.
Yes.
We've already seen in just this month in the supplementary budget about 8 billion more allocated towards Kenya Airways.
Yes.
That is very worrying, and that is because, as I always say, that is taxpayers' money. That is our money that's supposed to have gone elsewhere. Infrastructure budget keeps shrinking nowadays, and this is money that could go on be to any other development expenditure, but it's going towards a bailout. So yes, there is a need for the government to consider other alternatives. I know some of these parastatals are very important to the economy, are important not just economically, but also in terms of other soft measures, such as, for example, the national carrier. Of course, it's
yes.
If you look at most countries, always under the government. So I feel like that's always a factor that is looked at. But there's a need for it to look at, because out of 56 companies, not all of them bear significant importance that you cannot afford to privatize it. So I believe that there is definitely a need, probably intensive research in terms of which is the best way forward for each of the parastatals I have listed. This information is publicized. We critique it as people who are in the economy, and by the time it's going to the parliament and its committees and last to the president, we have exhausted it fully in terms of public participation, which is the right way to go and which are the impacts, both positive and negative.
Yes.
The government is to let go of this parastatal.
Pretty much. Justin, just as we go on a break, somebody asked a question. I don't know whether you are on that panel. They said, so if we let Mumias die, would Kenya stop operating? Why does the government keep on bailing them out? As the question that was asked on this panel. And across the board, they said, well, Kenya will find solutions as opposed to the government hemorrhaging money into Mumias and Nairobi University. All right, as we take a short break, once we come back, let's look into another dying company or stock, Uchumi, but it's back in the headlines, not because they're bouncing back or because in March 2020 there was a time they were top gainers for, 2 days? No, because Ernst & Young are back in the headlines for cooking their books back in a financial year 2014-2015. Is that the reason why Uchumi completely went down? Once we come back.